David Shapiro with the Shapiro Real Estate Group here in Austin, Texas, here with my compadre, Lee Abraham. Together we have a combined 60 years of real estate experience, bringing you our monthly market report. If you get a lot out of these, please go ahead and subscribe to our channel so you get updated right away when we post new videos. Share this with a friend. All that would be appreciated, giving us the incentive to just keep doing these and trying to keep bringing you more value. We have a special report coming out soon talking more about taxes, property tax values that you're going to want to hear. Some people have seen their tax values go up anywhere from 20 to 75%. I had two properties in the 70% range of mine. And so I know you're looking at that going, holy smokes, are my taxes going to go up 40, 60, 70%? You know, when I have to pay them in January?
Right.
Maybe for some people. Some people, I predict their taxes are going to go down.
That's shocking, David.
Yeah. And so I'm going to share exactly how that all works in our special report on that. So keep an eye out there. Subscribe so you get notified when that comes out. Another thing you can do is if you'd like to subscribe to our email newsletter, we make you aware of the YouTube videos coming out, but we also share some off-market properties and other information that you might be interested in knowing about. You got your value in the mail. You looked at it, you thought, holy smokes, it is up a bunch. Okay, well, first of all, the deadline to protest is May 15th or 30 days from when you got your notice in the mail. So mine was dated April 18th. So, you know, theoretically May 18th, but just get it in by May 15th to be safe. You have two options. One is do it on your own. Second option would be to hire a service to do it, and they charge a percentage of what they save you. So if they don't save you anything, doesn't cost you anything. So that could be an easy option for some of you. I have mostly just done that because I want an expert to work on it. I don't want to spend the time. I hire somebody to do that for me, like I hire people to do a lot of things that are experts in their field. You're going to want to check out our special report. We're going to have more. But I mostly just want you to be aware of that deadline and to move in that direction, because if you miss it, it makes it a little bit harder. There are things like late protests, and I'm not super well versed in that, so I don't want to get into the details there. Just focus on the deadline. But if you're watching this after May 15th or May 18th or whatever 30 days for you was, maybe there's still a chance. Go ahead and talk to an expert on doing a late protest and see what you can do there. There's no downside in protesting because they can't raise your value. They can only lower it. So at a worst case, if you protest, you throw some info in there, you can potentially just get a settlement. It goes down a little bit. To get a very favorable protest result, you're probably going to have to go to a formal hearing. And so that formal hearing could be in person. Last year, they did them over the phone, but that's another step. So you're going to have to do some research on that process. One thing that's different for this year that we've never seen before is TCAD, because we saw such rapid appreciation, they're trying to implement a 2% per month appreciation. So if you bought in 2021, we'd say, hey, if your appraisal came from TCAD came in at 1.5 and you paid 1.3, no worries. Just send in what you paid for it and they're going to lower it to 1.3. That may not be the case. They're going to try to add a 2% per month price trend. So if you bought in December, yes, that is true. You can submit at 1.3. But if you bought in, let's say, June, okay, well, they may not count June, but they're going to probably count July. So that's 6 months at 2%. That's a 12% increase. So that's another little caveat that not sure if that's going to hold up. This is a new thing, and you could potentially argue why that theoretical thing that they're trying to do is not going to work. We used to be able to pull comps from January 1st to December 31st and use any comps in that range. Some caveats here. Again, check out our special report. We're going to talk a lot more about that. So let's dive into our May market update.
Let's do it.
So today we're going to start by talking about the market stats. We're going to go over Fannie Mae's forecast for what's upcoming this year. Introducing the new Listing Inventory Barometer.
Very excited about this. Can't wait to roll it out in just a few moments.
And you put a lot of effort into putting this together, and it's something nobody else has, so I'm excited for everybody to check it out. History of the new housing supply. So we're getting a lot of questions about recession, interest rates are going up. Is that going to create a downturn in the housing market? And so I want to show everybody the history of how we got here and why we think that the trajectory still is up. Inbound tech migration continues, so we'll talk more about that. Some new developments in infrastructure coming, so let's just dive right in.
Basically, the chart that we're looking at here, we've been doing these market reports together since the beginning of the year. And as we go deeper and deeper into 2022, we're aggregating some of the stats that we've put together as well as some of the other entities that we look at. And I found this to be particularly interesting. We're tracking the monthly housing inventory monthly. And to do that, we're looking at the number of active listings at the beginning of a month. And that's what we have on the screen here. So this is showing as of January 1st, February 1st, and so forth, how many listings were available on the first day of the month. We're going to break it down, but you can see just from the chart the progression, the inventory is growing, and that's going to be the theme for today's presentation. So here we get specific, the 749 active listings. You saw that on the previous chart for May. That's how many we started with as of the first day of the month. 749 active listings. We're looking at our 3 different time frames for the monthly housing inventory. Over the past 12 months, we've averaged just under 1,000 sales a month. So you have 749 listings, 1,000 sales, gives you about 3/4 of a month, 0.75 of a month. Housing inventory, the 3-month average number of sales per month was 857, a little bit higher over the past month, 880 sales. You can see that the monthly housing inventory is beginning to creep up, particularly when you're taking a look at the lower number of sales per month. So here you can see the 30-day monthly housing inventory. So this is based on the number of sales over the past 30 days for each of these time periods. So it gives kind of an apples to apples comparison. And by golly, for the month of May, we're at 0.85 of a month. Still under a month. This may adjust when some of the numbers come in over the next few weeks. There's seasonality. Bottom line though, and we'll be breaking it down, the inventory is starting to go up, David.
Which is a great thing for buyers.
It's a great thing for buyers.
So we got the number of sales per month down 19%. Now what you'll notice is what we talked about last month
Right.
is we expected as sales got entered over the following weeks
Yeah.
that this would come up to about par, which it did. March 949 in 2021, 950 in 2022.
Right.
So we expect that it will go up. It's it's been about 100, maybe it's 10%. We'll see, but it's not going to be down 19%. It might be down a couple points.
Right. Certainly not going up, which is the most important element. But yeah, this will be updated as the rest of the numbers come in. Now we start getting into some interesting breakout numbers here. We're introducing a nuance this month, which is not only the year-over-year numbers, that's what we've been looking at, but this is also including the month-to-month. Here we're looking at a 3.5% increase from the previous month to today.
By golly, that is a huge jump.
David, you're shocking me. Of course it is. Do the math. What's 12 times 3.5? I mean, that's almost 40%.
Yeah.
Shocking.
40% annualized. If
Annualized appreciation. No way that's sustainable. It's a shocking number, but you know what? I'm seeing it all over the place. We're representing buyers and sellers, trying to adjust comparables that sold, 8 months ago, 7 months ago, and we're seeing that 2 to 3.5% appreciation truly in the most recent market data. So this is what's happening now, and it's a shocking number.
So now we've got the number of days to sell or days to market, which is down 17%. Earlier in the year, we talked about this anomaly where it went from 20 days the previous year up to 26. That was in February, and we talked a little about why that might be, and that nothing to worry about. The market's still on the same trajectory it has been on, and so we've seen that trend correct. And so this month down to 12 days, which is the same as last year, so there's no change there. But from the previous month for March, it was a 17% decline in the number of days it took to sell a property. So that seasonality, as we see more listings, but we see more activity going into the spring, things are selling really quickly still. There's still a ton of buyer demand. And we'll talk maybe a little bit about how interest rates and some of these other factors are playing in. It's not adjusting prices in any way. It's not adjusting days on market. It's really just affecting the number of offers is what we're seeing.
Right.
So maybe a house that had 5 offers a year ago has 2 or 3 offers today.
Yeah. And that really varies because we are still seeing very strong multiple offer activity.
Yeah, we had one recently had 12 offers.
Yeah, there's a ton of activity. So we can't read too much into the days on market. Bottom line is things are moving incredibly fast. So now we're looking at the number of new listings, and if we go year over year, we're down just over 10%, which is to be expected given everything that we've been talking about over the past several months. But we are up a little bit over the previous month, just over 2.6%. The number of new listings hitting the market is one variable, one data point, but we're going to break down some of the supply demand here in just a moment that really gets to the underlying causes of the inventory either going up or shrinking. And this is it, ladies and gentlemen. This is the announcement that we've been waiting for. It's the Listing Inventory Barometer. So the idea here is that real estate statistics typically move at glacial speed. Typically you're looking at stuff over the past year. It's a drawn out, long data set to draw conclusions from. That's great if you're looking at history, but if you're trying to make sense of a rapidly changing market, it doesn't work so well. Everybody's guessing on what the heck is going on. We broke this down when the pandemic first became news and started to impact the market because there was so much uncertainty and historically unprecedented macro variable that we were really searching for a way to accurately interpret day-to-day data. And that's exactly what this is. What we're looking at is a simple fraction where we're taking the number of new listings in a day divided by the number of pending sales in a day. So if you have 5 listings in a day, 5 pending sales, the supply covered the demand. It's 100% coverage. The inventory didn't grow, it didn't shrink. Let's take the same example. Let's say you have 5 new listings but 10 sales. That's 50% coverage. There were only half enough listings for the pending sales. That means that the supply is shrinking. And vice versa. If it's over 100%, the inventory is growing. So for the first time, we have a real-time analytical tool that helps us advise our clients what's happening in the market today, this week, the past 10 days, and so forth. And let's take a look at the next slide as we get into some of the numbers. So when you look at the chart, you see the 100% horizontal line on the graph. That's the point that we're looking at. So you can kind of highlight where that 100% is right there. If the bar chart goes over the 100% line, that means that the inventory grew in that particular week. So we were talking about daily numbers before. We've aggregated those into weekly numbers for purposes of this display. You can see the numbers numerically off to the right. And you know what? Generally speaking, over the past 2 months, a little bit more, the inventory has been steadily growing week by week. There's been a couple of retractions, but generally speaking, we have a growing inventory.
Yeah, so going back to, this is the week of March 21st to March 27th, it was growing. And then we have 1, 2, 3, 4, 5, 5.
Right.
Out of 6 weeks, it grew.
Yes. This is key. So for making decisions today based on your forecast, I recommend that this be perhaps the number one metric that you're really looking at to take the temperature of a market. The supply and demand can be very complex. There's a lot of variables underlying what goes on. This particular statistic, like I said, I love it. It helps us not only understand what's happening, but what's the direction and what's the velocity of the market all in one simple fraction. So as we go forward throughout the rest of the year, we'll be highlighting this statistic, and when we begin to see anything that results in price implications, we'll be reporting on it. Just one more tool to help us understand what's going on in real time.
So Lee, let's talk. If somebody's thinking about selling a home, they're seeing 5 out of 6 weeks, inventory is rising.
Yeah.
How does that impact their decision?
I think the key is understanding the list price strategy more than anything right now. We've talked about this before in my experience historically advising sellers. I was always trying to be on the razor's edge of accuracy that we should list it for what it's going to sell for. That's not true in the current market. The psychology of the buyer, the competition, the shortage creates a bidding war, and we're finding is typically resulting in sell prices that may be 10 to 20% over the comp or market value.
And that's the expectation from buyers. So I've had buyers send
Right.
me a listing and they're like, yeah, but I can't afford it because it's going to go 15% above that.
Right.
So if you price where you think it's going to sell, then buyers are just going to walk away. They're not even going to go look at it. They're not going to make an offer because they think it's out of their price range.
That's exactly right. And I think that's the guidance, is that we have to really be careful on not pricing for the aspirational premium. We have to reflect list price strategies that are more reflective of comp data, and then let the market do its thing. The number one in the trenches red flag for a seller is going to be your immediate competition in the neighborhood. Right now, typically representing buyers, it's rare to go into a subdivision or a neighborhood and have multiple listings to choose from. That scarcity on the hyperlocal level results in the bidding wars and that 10 to 20% premium. I remember the days when you would drive down the street and see 3 for sale signs.
Yeah.
We don't see that too much right now. You start to see a couple of for sale signs in your neighborhood, that's the anecdotal trigger to you that the market's beginning to soften up a little bit. Again, the guidance is have some accurate research and analysis on the market value so that we can price the home accordingly to get you top dollar.
And I think also what's important is these are still marginal differences in what's going on in the market. So yes, it is climbing,
right?
But it's not some crazy amount that all of a sudden you got to sell this week, otherwise your property's going to drop in value. There's plenty of time. You're going to be able to sell it for more today, in a couple months, and most likely next year you'll be able to sell it for even more. So really, it's a lifestyle decision at this point for most people, or if they're an investor and there's just something better they can do with their money.
Right.
There's no need to panic sell.
No.
We're not anywhere near that. You'd mentioned this number of 2 months of inventory. We're still under a month. There's still a ways to go to get to 2 months, and we're going to talk about the trend over time, over the last 7 years in a second here.
Yeah, so the guidance isn't that there's risk. The guidance is that you want to have the right strategy to maximize your gain as the seller.
And then for buyers, there's some more inventory coming online, so hopefully you have some more options here soon, and it's fortunately getting a little bit better for you.
It's great news for buyers, no doubt about it. More choices, more options.
All right, here's Fannie Mae's forecast.
I'm just going to sum it up. I like to try to make things as simple as possible. Bottom line is Fannie Mae thinks prices are going to keep going up over the next couple years. The pace of appreciation will decelerate. They've got their ideas on what that'll be. My main point here is Fannie Mae believes prices are going to continue to go up.
Yeah, so even though this chart shows a downward trend, it's just a deacceleration of appreciation.
Yeah.
So as long as it's above this line, it's still appreciating.
Right.
And this is nationwide.
Right.
Austin is arguably the best market in the country, so you would assume that we would do better than whatever these forecasts are.
I'll personally guarantee it.
All right. You heard it right here, folks.
You heard it here.
And then this is the rate of appreciation going back to 2001. So gold above the line is positive appreciation. Red is depreciation of real estate, decreasing prices. One thing I want to point out is I think it's quick to look at this chart and say, ooh, here was the bottom of the market. Well, this was the point of the highest rates of declining home prices, okay? But that wasn't the bottom of the market. The bottom of the market is when it stopped declining and started increasing again. So the bottom of the market is right here. This is the point where the prices were the lowest. Now, this is nationwide, okay? Every market was a little bit different. I think Austin bottomed. This is probably 2012?
Yeah.
I think Austin bottomed a little bit before that. And then since then, we have appreciation pretty consistently. And of course, 2021, we went vertical.
Yeah, and I'm just thinking back as we're looking at this because I was in the market back in those days.
Mm-hmm.
And it's interesting, we look at comparables now that sold months ago and we're adding for appreciation. You're sitting down across the kitchen table from Mr. and Mrs. Seller. It's taking 4 months for homes to sell, Mr. and Mrs. Seller, and they're going down 2% a month. So we're going to have to list it. Oh my gosh, very dramatic times.
Wow.
Very different, very uncertain. Just be thankful as a seller that you're in the current market because that was no fun back in those days.
And we're going to talk a little bit about why that was. And a lot of it relates to housing supply and housing starts. So this bottom link talks a little bit about the inventory. So here you can see we're jumping over. This is a really great resource if you really want to dive in. It's from Texas A&M, the real estate center, and we pulled the Austin metro area, so you can easily do that, pick different MSAs all across the country. And let's just take a look here. So you can see what the columns represent. Months of inventory is the one we're going to focus on, and then the date. So if we scroll down here till they start tracking it in 2015, where it was 1.4 months of inventory. And you can see the trend. It stays in the 2-month range until it starts declining.
Now, while you're scrolling, let's make the point. homes were appreciating during these years.
Yeah. So this is 2015 to 2019. We saw very consistent appreciation.
Right.
With 2 months of inventory.
And that's my underlying point as it relates to 2 months kind of being a benchmark for appreciation. Austin, over the past recent memory, has been in about 2 months or so, give or take, steady appreciation. We're less than half of that for the current supply. We have a lot of room to grow into. It could really be a phenomenal market for all parties. Obviously, sellers can be greedy. They want to get as much money as possible. But for those that are beginning their home ownership experience, that want to sell for more in the future, we have to have a healthy market going forward in time. And so a 2-month inventory in Austin would just be a beautiful thing. And it looks like we're moving in that direction, but we're far from it right now.
So as we scroll to the bottom here, it goes all the way to March of 2022, half a month of inventory. You can see it's been basically under a month since the end of 2020, with a little exception here.
Yeah.
And it's starting to go back towards where it should be.
Yeah, it should be reassuring from my perspective anyway. That's exactly what it is. It's just nice to see that trending upward. It's not a problem. I believe it's an opportunity.
And it's reassuring for both sides because it doesn't mean for sellers that prices will drop.
No.
It just means that buyers are going to have more options. And if they wait another year to sell or 2 years, prices are most likely going to still be higher.
Yes.
Let's talk about national housing starts.
Okay.
Here we have completions. So this goes all the way back to 1968. And you can see where the number of new homes that were being completed stands compared to the last decade. And so back in the 70s, significantly more homes being completed than there are today, with a country that had a much lower population. So the population of our country's grown, but we haven't been increasing the number of homes we've been building.
Right.
We were doing that into the 2006 peak right here. And then there was an overcorrection and builders got burned. And so they stopped building as many homes. And you can see that declined all the way into 2012, and it started to come up a little bit, but it was just way fewer homes than we had historically been building. Right? I mean, probably should have been consistently been building in this range right around here, right? That maybe would have been a more consistent, even thing that would have seen some sort of correction. But look how far below that trend line we are.
Yeah.
And we have been for years.
Yeah.
So going back all the way to 2009 to 2019, so like a 10-year period where we were building fewer homes than we should have. So now we're in catch-up mode,
Right.
And this is great to see that we've seen more completions now than we did even in 2006. I want to also show you the number of permits. It's not even close to where we were in 2006, and so this is a good sign. It's on the rise. I'm actually surprised that completions are better than 2006 while permits are worse. Because what I think the issue here is there's a lot of permits being approved. That doesn't mean the homes are going to get completed because we have lots of other bottlenecks. We've got supply chain issues and labor shortages being two of the main ones.
Yes.
The labor issues, I mean, most of it's on building the houses, but even the cities with permitting and their permitting staff is shorthanded. And so even if a permit gets approved on the front end, sometimes inspections are delayed, getting water meters installed by the city, gas meters, all these different things that the city's involved in. That's what we're seeing in Austin. It used to be that from approved permit, they could have this house completed in 6 months. And there's no builders completing homes in 6 months anymore.
Yeah.
Best case scenario, production builders maybe doing in 8 or 10 months. And these infill builders are usually taking 12 or 14 months to build a home. And so it's a much different picture, and more labor would be helpful on both the city and the construction side, and then the supply chain issues. You know, in any of these things, it's not just houses, but you see this in vehicles. We're missing one chip. You can't build the entire car.
Yeah.
Right? Or people get their cars and they don't have automatic headlights, automatic windshield wipers because the chips weren't available for those features, and so they just sell them without. But some of these things, it's like, well, you're stuck waiting on one piece for months. It holds up the build.
Yeah.
It's crazy. So builders are trying to get out in front and order stuff in advance, but there's just not enough of some of these things.
Yeah. No, it's not easy.
There's certainly no overcorrection yet, especially not in a place like Austin where we are way short, and that's just showing in all of the pricing, and not even just buyers, but renters. Rents increased 25% over the last year.
Okay, so what's driving this economy, David?
Tech inbound migration.
Right. Well, Google is continuing to invest. Austin, as you know, everybody who's been following these reports, one of Google's favorite locations to invest in. Coming up here, another 750,000 square feet of office scheduled to open on 2nd Street.
This is the famous Google sale building, I assume?
Yes, but here's the part that struck me the most as I was reading the news, and we have it underlined on the screen. In their communications, Google's saying that they understand the partnership between the local communities that ultimately drive their business. Taking everything virtual, remote, would potentially be an option for a company like Google, but they understand their commitment and partnership with the city of Austin and other municipalities. And to me, that is reassurance for folks that are concerned about recession, that are concerned about the sanctuary of their dollar investing in Austin real estate, that even the big players understand and are making it visible that they're committed to continuing to invest in brick and mortar.
One thing I will point out is that in the majority of recessions, home prices don't go down. Recession is defined as 3 consecutive months or a quarter of negative GDP.
Mm-hmm.
And so, or negative GDP growth, I should say. And so the GDP is declining for 3 months in a row. It doesn't mean that home prices are going down. And so most recessions don't last that long. They can anywhere from a couple months, so 3 months I guess is the minimum, up to 18 months I think is the longest. And if you look at real estate, it has such a long time horizon. I hope you're not buying real estate in Austin trying to make a 1-year flip on your property just because of appreciation.
Mm-hmm.
That's not the play. You should be buying with a long-term outlook. So we have a 6-month recession. I don't see that as being a huge deal. You know, people, because of the last major recession was the 2008, it was a financial crisis and a housing crash plus a recession. But those are connotated, and people think recession, they think housing crash. They are not the same thing.
Right.
And from everything we can see, the market is going to continue to hold up.
Yeah, we're seeing stability, particularly in the Austin market. And it's these sort of news announcements that are driving that.
Yeah, this type of momentum, it's hard to stop. So let's see what we have next.
The Boring Company, headquartered in Pflugerville, okay?
Elon Musk continues to bring companies to Austin, Texas.
Yeah.
The rumor is that Twitter headquarters is going to move here.
Yeah, it's possible. Here's the thing that strikes me, though. This is all about logistics. We've done some studies on some of the big VC firms and where they're investing in the technology that they're driving. And from my standpoint, what I've seen is that the logistical movement of people and things from one place to another is the key to the future, particularly of real estate development. The Boring Company has some extremely forward-thinking projects involved that are going to have long-term implications on development in Texas as well as around the country. If you knew that the Boring Company was headquartered in Pflugerville, let us know. We've got a special prize for you. Most people don't realize that that's the case. They're expanding in a number of areas here in Austin. There's jobs. There's all kinds of synergy going on. And if you look at the last paragraph on the screen, they're not doing this in a silo. They're in strategic partnerships with some of the biggest developers on the scene. And I guarantee you this is phenomenally huge implication on the future of real estate here in Texas, and I guarantee you we'll continue to talk more about it.
And until you had brought this article to my attention the other day, you know, when I pictured the Boring Company, I just pictured these, you know, tunnels that were just a bunch of dirt, and then you go on their website and you start looking at what they're up to and reading about it, you're like, wow, this is some pretty cool stuff, and I highly suggest you go check it out and you can see the cool stuff that they're up to.
Okay, so now, David, we're into some land development deals, and I know that this is a neighborhood that's near and dear to your heart, so what are you seeing here?
This is pretty crazy. You know, $95 million, this is a billionaire who came out and bought this property from World Class Holdings, and it's right around the Austonian. I don't believe they're going to have a height issue there because the Capitol View corridor is right down Congress, and so on either side of that, you're fine. They could put up 1 million square feet of office or residential right there. So huge deal, $95 million for a piece of land, and the development is going to just keep coming. So next to a place I visit quite frequently is Republic Square Market. They got a great Saturday farmers market. They just roped off this entire parking lot. So I am curious where people are going to park for the farmers market.
Okay.
We'll see what happens there. I will keep everybody updated on this very important detail.
Great.
This is going to be a 48-story tower 800,000 square feet of office. And, when I go and sit in Republic Square Park, which when I moved here, there was no tall buildings around it. And now I sit there and I'm like, I feel like I'm in Bryant Park in New York City with just these towery buildings. We have another one coming. The city block just north of Republic Square is the old post office. Side note, I had a P.O. box there about 8 years ago. They kicked me out because they were going to tear it down and develop it. Just to give you a little bit of a sense of how slow things sometimes move in Austin. And they moved my P.O. box to the Congress new post office location. And that has been sitting empty since. And still no announcement of what's going to happen there. But this comes up where people will see like a rendering of a building, something's for sale, and they'll freak out. Oh my God, they're putting a building there. Well, these things take years. When I first moved here, I toured the 360 condos, and people were selling. This is in 2000, end of 2010. People were selling because they were worried about all the towers that were going to be built around them. None of those towers got built for like 6 years or something. And so most of them just got built in like 2018.
Right.
So it takes a long time for these projects. As a side note, this one though, they got the fence up. It is actually beginning. Eventually, there'll be something to the north. We got another block north of the post office, the tallest building currently under construction, which is 6X Guadalupe. So this area is going to have a ton of new square footage available here in the coming years.
Absolutely, driving the economy.
The park can't go anywhere, people, so don't be worried. Republic Square Park going to continue to host free yogas throughout the summer. One Oak, this is in my neck of the woods. I drive by this one every day. I see them moving some dirt over there just this week, and they sold out before they even broke ground.
Yeah.
Pretty incredible how some of these condo projects are doing this. Another luxury building coming to South Austin.
So now we're looking at the Symphony Square project, which is under construction. This is at 12th and Red River. It's a 7-story office component of the larger project. Essentially 170,000 square foot of office space, 5,000 square foot of retail and restaurant. Should be ready for occupancy in about a year or so. Next, we've got some condos. You want to review these for us?
Montague condos? Is that how it's pronounced, possibly?
Oui, bonjour.
This is a project by Pearlstone Partners. They did the Nativo on Rainey Street, 175 new residences. I've been watching this lot, and again, fences up, and we're going to start seeing some action over there. Condos ranging from $500 to $1 million, with the average going to be in the $670,000 range. We need more condos, we need more density, so I'm excited for this project.
Yeah. This project is continuing on a trend that I believe you and some of the investors that you've partnered with have kind of kicked off here in Austin, which is the micro apartment concept. We're seeing the Bruno announcing that they're going to be entering the market. These are units that are ranging from 308 square feet to just over 700 square feet. The average size just over 400 square feet. And this particular project has mixed use with retail, commercial space on the ground floor.
And one thing I'll note, this is not condos. So this is the developer saying, hey, we believe in this market so strongly, we want to just own this building as a rental property, as a property for ourselves.
Right.
Which this is the second building I know of that they've done this with, this developer. And they mostly have done condos, single family homes for resale immediately.
Now we're expanding out. It's always good to take a look at what's driving the market. We saw some of the recent developments that we've just highlighted, but now as we kind of go out to the periphery, so much exciting activity to the north. Round Rock getting another $7.75 million in funding for transportation projects. Won't go into all the details here, but the bottom line is that growth is coming. To accommodate that growth, the municipalities need to have the infrastructure in place to accommodate all the people that are moving there. Up north, we've talked about it before, and it's a sleeper right now because there's not a lot to see unless you're actually driving through the neighborhoods, but Hutto is absolutely exploding. This is a potential $2.4 billion investment. They just approved an initial application from Applied Materials. It's a global company. They're a semiconductor research and development firm. They're looking to improve chip making. We talked about that sector before in terms of manufacturing here in Austin. So this is a potential $2.4 billion investment. State-of-the-art research, development labs, advanced semiconductor processing, and already over 7,000 construction phase jobs. Just to put this project into motion. Eventually, construction would start next year, and that's when the first $80 million investment would be due.
Where are they going to find an extra 7,000 people to build this thing? It's like, are they going to pull them off of residential jobs, and now all of a sudden our housing supply thing is still an issue?
There's an old saying, build it and they will come, pay them and they will come quickly. And so we believe that they'll be able to bring people in. It's a lot, and that's why it's not easy. But the point is that the infrastructure is continuing to grow, appears to be actually accelerating. We have one more Hutto announcement here, which is a 31-acre development that's been approved. This is residential use over by Exchange Boulevard, and the project is called the Hutto Landing. Any of our listeners that are forward-thinking investors that are looking to build a portfolio, a buy and hold spec strategy, I'm not talking about rental houses, I'm talking about land in the path of development. Let's talk about the pathway between Hutto and Round Rock, what's going on up there. It's extremely exciting. This is the before picture.
Yeah, and you've got your finger to the pulse, your ear to the ground, you got some exciting potential opportunities, so reach out to Lee. Thank you for joining us today on our May market update. Again, if you got a lot out of this, like it, please go ahead and share it. Comment below if you have a question. I'm going to jump on there. Lee or I will answer all of your questions there. And don't hesitate to reach out if you're thinking of buying or selling in Austin. We'd love to chat with you more. We look forward to seeing you next month.
Thanks, everybody.